Talking about mutual funds, which is a very important domain for you as well, do you think that there is a regulatory framework in place, but it needs some tweaks or some changes? What is your take on that?
So, if you are playing a game of bowling, you need guardrail to ensure that your ball goes in the right direction. The regulators like SEBI provide guardrail to the industry. And it is thanks to regulation we are able to earn investors' trust. There are so many Ponzi schemes which are not regulated. What's the experience of investors over there? And how much scale size they can make? Cryptos again is unregulated market. What kind of investor protection and governance will be there is anybody's guess. On the other hand, mutual fund industry has grown to 60 lakh crore plus. We manage trust and confidence of more than 5 crore customers. That's all possible thanks to SEBI's regulation. Any industry which has to grow will require regulator. Thanks to RBI, banks are growing. Thanks to IRDA, insurance companies are growing. Thanks to SEBI, mutual funds are growing. We need regulators or referees in the game which we are playing.
Right. Nileshji, two things about young people experimenting with the markets. One are the millennials who like to, take risks. The other part of this young group are the young fund managers who, on your footsteps, want to aspire to become, experts in the field. To both these components of the young entrants in the markets, what is your piece of advice as we conclude this conversation?
So, one, there is no free lunch in the world. Other than your parents, no one is going to give you free lunch. There is risk and hence there is return. To all the young millennials, my advice will be four. One, please follow income minus savings equal to expenses rather than income minus expenses equal to savings.
Wonderful.
Many people want to borrow on credit card to spend or invest. That's not the right way. Second, little drops of water make an ocean. Be a regular investor in market. Don't waste your time trying to predict where markets will go. Number three, be a long-term investor because if you want good juicy mango, you need to wait for a dozen years after planting mango tree. And number four, don't put all eggs in one basket. While you do have risk-taking capability, you still need some amount of anchoring in your portfolio to withstand volatility. Divide between debt, equity, real estate, and commodities like gold based on your risk appetite and investment objective.